My name is Tanya Romaniuha. I represent TechIsland. I'm a general manager of TechIsland. And today we have our fourth TechIsland FinPro Meetup. FinPro community, it's one of the communities we run under TechIsland umbrella, which is dedicated to financial professionals working in tech industry, in our member companies. Today we have special topic which is relevant to each and all of us. We had an overwhelming response from the community today. We have closed registration far before, even a week before start. We always prioritize TechIsland members and their employees for such events. So if you're not yet a member of TechIsland, please consider joining. Also, if you have company and you can extend an invitation to your financial team, if you have tech company, obviously, to join our FinPro community. It's open, it's not restricted only to TechIsland members. So the topic today is tax reform. And it has passed. I'm happy to say that TechIsland welcomed an opportunity to contribute to this process as the voice of the Cyprus tax sector which contributes 8.5 billion to the GDP of Cyprus. It was the sector which is growing faster than any other. We brought forward, I believe, substantial recommendations with, and our objective is clear. We want Cyprus grow as a tech destination. We want Cyprus to be attractive for tech companies to operate from here, for tech talents to relocate here, for local talent to grow from here, and for Cyprus to become a tech island of the Mediterranean, and for our economy to be competitive on the global market. The debate is over. There was a lot of debate. I'm happy to say that today we will also hear, let's say, practical insights on tax reform, a little bit maybe the political direction on the tax reform. Now we're entering the implementation phase. We, as TechIsland, as an association, we will be watching closely how the rules apply, what is this in practice, what does this mean for business. We have already issued a guide on tax reform. I want to thank a few of our members of the community for contributing into development of the guide. Marios, we have also Helga from XNES, Marios Papageorgiou, who will be today on the stage. It's accessible on our website, free to access. You can just go on our website and find it. I want to thank also payabl, who is a partner of Financial Pro community, who is helping us make this kind of events possible. And we will have a few other events, so follow our social media and our news. We will definitely, as TechIsland, will be further engaging constructively with evidence-based approach. We will try to coordinate and issue some of the templates, maybe on how to apply for stock options, because this is one of the new development on the tax reform. Not an easy one, but in the right direction, and we are happy that this provision is there. So let's keep this communication open. What can I say also before inviting our speakers to a stage? That you see, we have many cameras and many photographers. First of all, after event, the video recording will be accessible, so you can share it with your colleagues. partners. And also for photos, there is a QR code. We use Memento platform. You can basically scan your face right now, and you will see instantly the photos taken today. This is the QR code. I will make a step back for you to scan it, and feel free to post it anywhere you want. I want to invite Haris Georgiadis, member of the House of Representatives and member of the House Standing Committee on Financial and Budgetary Affairs, for intro speech. We're very happy to have you here. It's an honor for us. So please welcome.
Thank you, Tanya, and I'm delighted to be back at another TechIsland event with this fantastic community. So, I mean, as Tanya was speaking and as I was checking the panel, I thought that I was invited to, to try to say a few things, but then the experts would come and actually explain or try to explain the mess that we voted. Yes, I think it was a smart move to have the experts after the politician. But actually, I do believe that the latest tax reform was an overall positive, something that will actually work as a boost to economic activity and to entrepreneurship in Cyprus. But even more importantly, it has confirmed that we still have a very responsive, pro-business direction across the political system. And this is something which I consider very important. We all know that we went through a very rough ride 10, 15 years ago. It was this, I would say, this partnership between industry and government, between public and private sector, which helped us take those decisions that led us to recovery. And I was actually glad that I saw this approach being repeated once again during the latest reform. The team of experts will provide the details and will answer the questions. But I want to make the point that once again, we took some bold decisions regarding tax policy, not hesitating to overall significantly reduce the tax burden. But I am absolutely confident that despite the fact that overall tax rates have come significantly down and there is an expected deficit in tax revenues, the net effect will be positive, because as we have seen on previous instances, when we lowered taxes, lowering taxes does not mean that the government will have less revenue. We were still in the early years of recovery in 2015 when we introduced the first tax breaks, the first tax incentives, including the very important tax tools of NID and IP and the non-dom. I was finance minister at the time. There was hesitation. How come we are considering tax breaks and tax reductions when we are actually trying to close a fiscal deficit? Well, the outcome confirmed my policy approach that having a stable, attractive tax framework introducing tax breaks and incentives is actually the best pro-business action a government that the government can take, and one which will pay back through the influx of, let's say, local and foreign investment through renewed economic activity. That was not the only set of tax breaks we introduced. We moved on with lowering taxes on real estate and property, on personal income. And in fact, this was the direction. I'm not in government anymore. I'm not even a supporter of the government that we have today. But this is actually the notable point that irrespective of who is in government and who is in opposition, we were able to work closely together with other political parties, with the industry, with the chamber, with the Bar Association, with the Auditors Association, definitely with TechIsland. We received feedback, and we were able to take decisions which make me feel very confident that they will work. Maybe you will ask me, okay, how does raising corporate tax to 15% from 12.5 fit with, what I'm describing, let's say an approach of actually lowering the tax rates and introducing incentives as part of this pro-business and pro-investment policy. Well, actually, I think it does work and it does fit. Years back, Cyprus needed a special tax rate of 4.25 to be able to attract international business. Those were different times, and a very low tax rate was basically the only tool we had in the toolbox. Now, overall tax burden remains low, it remains attractive, especially if combined and seen in conjunction with the other incentives that we do have in place and we have in fact maintained and even expanded, but credibility, reputation, not being characterized as let's say a kind of a tax haven is equally important for a more mature jurisdiction as Cyprus is already. This does not mean that we should not remain, let's say, alert and ready to consider, through interaction with the industry, further incentives, tax breaks. A tax system should be characterized by stability, yes, but always being able to introduce fine tunings that will maintain its competitiveness. Also, non-tax incentives. For instance, if we are successful, hopefully by the end of the year or early next year, to bring Cyprus as a full member of the Schengen zone, it will be something that will be equally important with a very strong tax incentive, maintaining Cyprus as a safe place to live and to do business is equally important. So we do have work to do on across the spectrum, let's say, of policy areas. And my message to you, as somebody who is no longer in government, still in parliament, soon to step down from parliament as well, is that I am confident that we still have this consensus between political forces, between government and parliament, together with the industry, that is enabling us to take the positive steps. And it's up to the experts to let's say, to make the points of this latest tax reform in further detail. And it's up to all of us to actually make it work and steer our business ahead, and in that way steer our country ahead also. Thank you very much once again for inviting me, and thank you for your attention.
Thank you. Good evening. Nice to see you all. Haris, I can confirm that this is not a mess. I think it's a well-balanced approach in the comprehensive tax reform that we had for 20 years. The last tax reform, we had it in 2003. So the key question that we will try to answer today as a panel is not on whether we need a tax reform or not. That question has already been answered. It's on whether we manage to maintain a competitive, reliable, and fit for the future tax system, especially for tech companies, starting from the small startups to big multinational platforms. I think that's the key question. And our objective today would be to cut through the noise, focus on what really matters, and try to give to you guys some sort of practical insights. That's the reason we organized with our TechIsland friends, collecting questions from you. We've done a lot of work with Artemis and Nadia in trying to figure out which questions can fit into the discussion today, in an effort to give you some sort of practical updates. But it's a new legislation. We're also still learning, and the implementation of a legislation, it's the key. So we'll be covering with my colleagues in the panel today areas like the IP regime, individual taxation, crypto taxation, stock options, and other interesting topics. And I'm delighted to be joined by 4 experts that they bring different insights in the discussion. Today with me we have Christos Theofilou, international tax partner and transfer pricing expert in Taxand. Spyros, tax partner and head of tax in Primus. Marios, founder of a very cool app for individuals, TaxApp.Cy. And Michael, associate director at Nobel Trust. Guys, please join me today. I will start with the first question, which I will address to all of the panelists in an effort to get your first kind of reaction and ideas about the tax reform. So, as I said, we have the first comprehensive tax reform in the last 22 years. So, guys, what are the main changes of the tax reform, and how do they align with the country's ambition and vision to remain a regional tech and innovation hub? Does the final package represent a structural shift in Cyprus tax policy, or more of a targeted recalibration? So let's start with you, Christos, to give us your first thoughts.
Good afternoon, everyone. Thank you, Bambo, for the question, and let me thank TechIsland and payabl for organizing this great event in order to be able to discuss with you guys about the tax reform. So from the corporate tax perspective, I will say that there are a lot of moves to the right direction. I will start by saying, for example, the revised reform brings clarity, and clarity is very, very important to our tax system because foreign investors, they need tax certainty. So to name a few, a lot of issues that we have in the past, like, for example, the interest that was taxed either in income tax law or defense tax law, now for corporation is straightforward, it's income tax law. Likewise with the rental income, this brings clarity and certainty to the taxpayers. In addition to that, we also have extension of investments, like, for example, we have the extension of the losses, which this moves more to commercial reality when you have losses, which is again a move to the right direction. In addition to that, we also have seen other incentives, like, for example, there is clarity about, and I'm sure that you all have here IP assets that are brought into the tax base of Cyprus. Now the tax department accepts the step-up cost for the addition, for the higher tax base that it's brought into Cyprus, which again, this brings clarity and lowering the tax base for such assets that are brought into Cyprus. In addition to that, we have also seen tax incentives that you get the additional years for the super deductions, which again, this is a benefit. I don't want to take much of your time because we are going to elaborate more. A final key point is that, of course, whatever we do, and it's also mentioned by our MP here, by Harris, is that we need to take this neutral. So we have also some measures that they are a bit on the other direction. So we have the increase of the corporation tax by 2.5, and also we have the increase of the definition of the immovable property, plus with the decrease of the threshold of the property risk clause, which what does this mean in practice is that the tax office will be able to pick up more capital gains tax transactions.
I think all of the points, Christos, are very important, and I think let's continue with Spyros so that to hear some further thoughts on the corporate tax side of things, and then we can continue with Marios and Michael for the individual taxation.
Okay. Happy New Year to everyone. Bit late, but wishing you all the best. When looking at whether this tax reform is indeed accurate or not, it just requires a small comparability analysis. And what is in reality is that the only thing that has significantly changed from a corporate stance is the actual rate of tax, from 12.5 to 15. What existed before, as at 31st of December 25, remains or has been improved. So what has brought the tech community together, and all these developments we are seeing in Limassol, developments by means of proper businesses, proper organizations, proper people, the beauty we're seeing surrounding Limassol was because of the system that existed before the tax reform. So there's nothing we can say in reality that would be on a negative note, besides, of course, every person wanting their own to come up to either a zero tax gain or, let's say, enhancing their own personal or corporate benefits. We'll be getting into the details later on during the discussion on certain aspects that were included in the reform. There are aspects that need to be seen in accumulation, not just as part of the reform, what happened, trigger point reform, but also what happened over the last 5 years, let's say. Cyprus was, let's say, under the radar of it won't be competitive anymore when we introduced back in 19 and 20 thin capitalization rules, CFC rules, hybrids, and so on. People were having panic attacks just by reading them. We survived that, we moved on. So I really don't think that we'll have a tough time dealing with the 12.5 becoming 15. Most of you know what incomes are taxable in Cyprus and which ones are not. A big chunk of incomes are not subject to tax. Others are subject to a favorable tax rate if structured correctly. So it's, you can only see the benefits and move on from the benefits. We won't get into details now. This is just as a small introduction to what will be going on later on.
Thank you, Spyros. And I think the important point to take away from this positioning from the panelists is that, as Harry said, when you are becoming a mature tax jurisdiction, you will be expecting to have all these rules. As you mentioned, Spyros, interest expense limitations, transfer pricings, etc., etc. And that's becoming a mature jurisdiction. So the takeaway that I get from your positioning, guys, is that you don't believe that we have a fundamental change on the system. It's more of a robust reform which brings clarity on certain areas, right?
It's a bit technical, but for those that are quite technical on tax, there were areas that were quite grayish that have now become white or black, which is important for tax practitioners, for the groups coming over to Cyprus, settling over in Cyprus. They need clarity, they need certainty. And the manner of dealing with taxes before, which was for instance, let's see if it works out, doesn't offer any form of security.
Good, thank you guys. So Marios, Michael, I mean, some first positioning from you, Marios, to start with individuals.
So good evening, everyone, again. Very happy to be here with you, and thank you, TechIsland. So I guess, Bambos, the million-dollar question is whether this tax reform has improved the Cyprus tax system or not. So I'm dead curious to find out what you guys think. So I'm going to ask you this. Those of you who think that the Cyprus tax system has gone worse, if you can please raise your hands. Has gone worse. Not a single hand. So I think it's 100%.
I think they're afraid, Maria.
Do you want to make me make this?
Guys, I'm not from the tax office. I don't work at the tax office. All right, good. We're aligned. And we are fully aligned. The way I break it down, and I'll try to be quick because I love talking, so feel free to interrupt me. You know it already.
Go for it. You have 3 minutes.
I break it down into stakeholders. So the way I see it, there's 500,000 people living and working in the island as employees and self-employed, vast majority employees. All of them, as of this month, you got your pay slips, most of you, are paying less tax, regardless of their income, because the brackets have changed. On top of that, family guys, people that have kids, invest in green assets, have a house or renting out a house, subject to limitations, they will be paying less tax. The 20 and 50% exemptions, we have not touched them. They're the same. Crypto, 8% flat tax rate, one of the lowest again in the EU. Stock share-based payments, 8% flat. Pension from abroad, 5%. We have not touched it. So on individuals, I think it's dead obvious that they will be paying less tax, and for them, the tax reform is beneficial. Now, moving on to the companies. There's about 200,000 companies registered and tax resident in Cyprus, give or take. Let's say half of them are owned by Cypriots. Again, there's no dividend distribution for the Cypriot-owned companies, a huge benefit. The dividend tax from 17% has gone down to 5%. Again, a huge benefit. So it's unquestioned, undeniable that for the Cypriot-owned companies, it's an improvement. And finally, for the companies owned by the non-DOMs, by the non-Cypriots, in simple words. The non-DOM regime, we have the best non-DOM regime in the EU. You can ask AI or Google it, not take my word. The non-DOM regime has improved from 17 years tax-free dividends and interest, it's 27 now. So, in my view, and I'm concluding, the Cyprus tax reform is a step to the right direction. Despite the minor 15%, 2.5% increase to 15%, the rest are it's a positive step, and Cyprus remains on the right path.
Thank you, Marios. I mean, very, very valid comments indeed, and I think even if it's not so relevant for this audience, the abolition of the dividend distribution, I think it's very, very important because it narrows the gap between Cyprus tax resident domicile individuals and Cyprus tax resident non-dom individuals. And it's not only the 17 to 5, but the abolition of the dividend distribution, which was a tax without even getting the profits, was a very bad thing. So I think that's a very valid point. So Michael, coming to you now, even if Maros covered quite a lot actually, but I mean, tell us your first position for individuals, please.
Good evening from my side. Yes, indeed, Marios covered a lot of things. From an individual side of view, the new reform has a very positive outlook. Especially for the non-domicile community. There are 3 major pillars from my side that I believe are quite important for them. Are the income tax thresholds, the new tax breaks, and the 50% deduction which has remained intact. Really gives Cyprus, makes Cyprus one of the best places for families to relocate here, and for people to bring here with their family. Now, when it comes to the special mode of taxation rules, particularly the golden halos, crypto assets, share-based payments, the new rules are quite transparent and create a very safe ecosystem from a regulatory point of view. Lastly, the new non-dom rules that can extend up to 27 years turn Cyprus into a permanent home where wealth can be built rather than a temporary tax shelter.
Thank you, Michalis. Very, very valid comments indeed. And I think let's drill down a bit more on certain topics. And going back on individual taxation, Marios, you're specializing in individual taxes. We have seen quite a few changes in relation to individual taxation, as you mentioned. So what are the three main areas that are important to note for the tech community, and how might this affect talent attraction and retention in Cyprus?
I'll try to break it down into three subjects. One, the tax brackets, the change in the tax brackets. Two, the new tax deductions. And three, the Form 59. Now, the tax brackets, I will not elaborate. It's you can just Google it again. It's from 0 to 19,500 was tax-free, and then it went up 20, 25, 30, 35% above 60K. The brackets have changed. The percentages remain the same, but the brackets have changed to 0 to 22,000, so the tax-free amount has gone up. 32, 42, 72, same percentages. I'm not going to elaborate any further. It is very simple to understand. On the new tax deductions, there's been plenty of new tax deductions introduced, and I'll briefly try to take you through. If I get boring, just interrupt me and ask any questions, or it's going to be at the end, yeah? Any Q&As?
Yes, at the end.
So, new tax deductions, basically, it's new ways to reduce your tax. Everyone has been asking me for the past years, Maria, how can I pay less tax? And I'm referring to employees mostly. Before the tax reform, you can only pay less tax by pretty much creating a life insurance or a health insurance or contributing to your employer's provident fund. Post-tax reform, there's new tax deductions. There's new deductions, as I've mentioned before, for housing, for families with kids, with dependent children younger than 24 years old. There's new deductions for housing, and there's new deductions for, we call it green transition assets. I'll try to be quick, and at the end we can discuss in more detail. Child deductions. It's 1,000 euros for the first child, 1,250 for the second, and 1,500 for the third child per parent. This is very important for you to know that it's per parent. But there are limitations, which I will explain in a minute. Housing deductions. If you own a house, or if you're renting a house, your main residence, up to 2,000 euros per year tax deduction, again, per parent, subject to limitations as well. Green transition assets, if you drive an electric vehicle, or if you have insulated your home, installed photovoltaics, up to 1,000 euros per year, again, per parent, and you can carry forward any remaining amount for 4 years. There's also an insurance for housing against fires or earthquakes, 500 euros, which is the fourth way to pretty much reduce your tax as an employee. All these are subject to limitations, as I said before. There's limitations for basically the household income. Now, in simple words again, if you have 1 to 2 kids, the limit is 100,000 euros, total income. Now, it's worth noting that when I say total income in a household, it's not just your salary income. So if you also have dividend income or rental income, and your wife has also interest income, it adds up to your total limit. This is very important for you to know. So the limits, again, going back, 100K, 1 to 2 children, 150K, 3 to 4 children, 200K plus for the 5th child and above. This is not all the 4 things that I've mentioned. The 3 of them, the first 3, are not capped to the 1/5 limitation. Another thing which made an impression to me is that for the deductions to apply, you have to submit your tax form timely, and I've read somewhere that your husband or wife must give consent at the tax form. I don't know how this is going to work out with divorced couples, but it's something to be considered.
Let's not go there, man.
Yeah, I'm not going there. So this is pretty much it when it comes to the new changes or new ways to reduce your tax as an individual. And I'm concluding on the third point, on the Form 59. The Form 59, I'm sure all of you are aware of. You've already probably done it. Your employer is giving it to you at the beginning of the year to fill it in and sign it and give it back. If you do not fill the form correctly, then you risk paying more taxes than you should, and no one likes that. I see some heads doing that. So you should make sure that you fill the Form 59 correctly. Do I have another minute? Or no?
30 seconds.
30 seconds. I was going to guide you through the Form 59, actually, but we don't have the time.
During the drinks, you can demonstrate.
There's a tool on the TaxApp website which is labeled Form 59, and it clearly states the new deductions, the new boxes, and how to fill each box. That's pretty much it from my end.
Thank you, Marios. And I'm sure the app is great, and it completes everything and also pays taxes on behalf of people.
Pays less tax.
Pays less tax. Yeah, that's the important point. Thank you, Marios. I think let's open up a discussion, Christos, as well for the corporate tax, and we all agree that the IP box regime remains the cornerstone of our tax system for tech companies. So the tricky question is, does the tax reform strengthen or dilute its effectiveness for tech companies? And how does Cyprus now compares in practical tax terms to peer jurisdictions competing for tech headquartering and IP-driven business following the increase in the corporate tax rate?
Yeah, I think this is an excellent question. And I'm pretty sure that the majority of you, as this is a Tech Island, this is a question that
and it comes from the audience's question, but yeah.
So I will say, let me start about the regime that it was before, not to get into the details because I'm sure that everybody you are aware with the regime, but a ranking that it was recently published by the Tax Foundation for the EU jurisdictions, that Cyprus ranks second in its IP box tax regime. So, I mean, you will understand that we have a very good tax regime in Cyprus, and presumably this is one of the reasons that Tech Island is here and we have a lot of members here, and this is very good for the country and for everybody. Now, what are the good news and maybe what has changed is that, as we already mentioned, that IP assets that are brought into Cyprus, you take the step-up cost. We have the super deduction extended, and that is something that has been extended over for various years. So this is, again, the super deduction is a positive direction. Of course, the losses and so on. What else that we also see in practice when it comes to IP box companies is that, of course, transfer pricing obligations are on the spot. The thresholds are going up. But I'm quite sure that the majority of your transactions, aside the financing that we're going to discuss later on, is that the majority, you mostly have IP transactions and services, which in practice, we see that countries, when they sign their IP agreements, they might have what we call in practice mixed contracts. So one component should be royalties, another component should be services, and you need to split them to tax them accordingly. So all of these, they remain the same because you need to do your same calculations and the same maths in order to end up with the correct tax position. However, there is a relax on the compliance burden to the IP companies that they have lower transaction from transfer pricing because the services component, which is ranks differently with the IP component in terms of transfer pricing, the threshold was moved from 1 million to 2.5, which is good news for your compliance burden. Now, as you understand that the increase of the rate, it will move on from the effective tax rate from 2.5 to 3%, which is I will say a small increase, which is like a 0.5, but I will say, having in mind the other benefits, we expect that this small increase will be washed out with the other benefits. So in concluding, I will say that the IP box regime in Cyprus, not directly but indirectly, has received certain tax certainty positions, that this is good news for the taxpayer. I will say on their benefit, with a small fraction on the effective tax rate due to the increase of the corporation tax. But other than this, we don't expect massive changes, for the tech companies.
Thank you, Christos, and I think that's a very important point. It's a testament of the country to keep stability on this very important sector. So in plain, simple, non-tax words, so what we're saying is that you move from a 2.5 to a 3% effective tax rate, other things being equal. So whatever we used to know, we still know today, yeah?
Yeah, and you might be better off. Depending on your transaction and your structure and how you are,
exactly.
If your step up is higher or your super deduction are higher from the increase of the small fraction, you might be better off.
In effective tax rate terms, correct.
Yeah.
Thank you. Clear. Circling back to individual taxation, and Tanya also mentioned about the importance of having a regime for stock options. And I know, that TechIsland was very active in these discussions. And I think, Michael, the question here is that on whether the new rules achieve that objective of supporting attraction and retention of highly skilled international talent about the stock option regime.
Sure. The new option regime is a brilliant opportunity and strategically very, very important for startup tech companies considering to relocate to Cyprus. And at the same time, it's very tempting for high talented employees. From the employee side of view, things have improved, I would say, a lot compared to the previous regime. Now employees can be taxed at a flat rate of 8%, where in the past, if they were taxed at the top bracket, the taxation was 35%. If you take into consideration the 50% exception, the relocation package for an employee is quite competitive. And having in mind that this benefit can last for up to $1 million for a period of 10 years is really a tempting, let's say, option. From an employer's point of view, the new regime promotes loyalty and commitment, since the employee has to remain with the company for minimum 3 years in order to get the benefit. I would say the new law promotes transparency and waives tax risk, since based on the new legislation, the scheme has to be filed with the tax department and get approved. So you should not expect any assessment in the future based on your emoluments from such schemes. I would say another important aspect of it is the fact that the existing plans can still be approved and covered by the new legislation if the plan is filed with the tax office within 6 months, by 30 June 2026. With my colleagues, with my law colleagues, we have gone through many share option schemes in the past, and I see that compare the previous law with the current law, they might need to be adjusted. The new law provides that the ordinary shares that you should give ordinary shares to your employees that have the same rights as your company, the stocks of your company, other than the voting rights. So in the past, we have seen giving preference shares or shares with other rights. So the new scheme is strict. It provides that only ordinary shares should be given. Also, it's worth saying that it's not, the rights are not transferable. And this scheme is not available for shareholders that own more than 25% of the company. All in all, there is much clarity, and I believe the new legislation is very helpful for the startup companies.
Thank you, Michalis. And I think you are absolutely right. I mean, that discussion was actually geared more towards startups. So there are quite a few conditions in order to be approved. But the whole idea was to encourage businesses to come in Cyprus, encourage talent to come in Cyprus, to have remuneration package structured through share options. That's very common in this industry. And as you said very correctly, there's a 6-month window for existing plans to be submitted and get approval. So, I mean, I think that is a very important point. And moving on to an area where we got lots of questions, crypto taxation, and I will ask you, Spyros, what are your views on the introduction of crypto taxation, and how is this expected to be applied in practice? And where does Cyprus stand compared to other EU and non-EU jurisdictions? I would like to hear your views on this topic.
Okay, so again, you need a comparison. Before 25, after 25. So before 25, if you would ask professionals how are gains on cryptos taxed, you would either get a question mark, smoke weed, look up in the stars and say, I don't know. Some would say, depends if
or only look at the stars.
Sorry?
Or only look at the stars.
No. Weed is sometimes also good if you've got panic attacks and so on. Allah, you'd be seeing a segregation between trading, non-trading, and so on. So if someone was a trader in crypto and they were individual, they would have ended up paying 35% top bracket tax. A company would pay 12.5. So what we have post 25 is a flat 8%. So answering the question, is it good? It's a lot better than 25. And it's a lot more clear because we've eliminated the weed process. So there is no let's speculate, it's 8% flat for everyone, individuals, companies. Individuals no longer need to set up a company to own their cryptos. We saw that because once individuals were told if you sell them, you'll pay 35%. If you're in the high tax band, they would set up a company, put in their cryptos. They were non-doms. They would extract the dividend, end up paying 12.5. With the 8% flat, just keep them on your name. No reason to have a company. No reason to go through the compliance costs, paying an auditor and so on. So it's a lot more clear. Now, it applies to all transactions surrounding crypto besides mining. There are countries that do tax mining. So we rank highly. When it comes to the mining part, we're 0. Other countries are taxing. And if we compare it to other jurisdictions, if you do your own research, you'll see that we're not the best, we're not the worst. But we're one of the first incomers to the game to legislate it clearly by saying it's 8%. We do see countries like Germany, let's say, which you'll end up paying taxes whilst you're sleeping. They're saying don't pay any tax on crypto gains. Yes, but pay 70% on everything else. So it's a mixture of things. What we're saying is 8% on crypto together with the rest of the tax system that comes with Cyprus. So it all blends up into a nice recipe. Even with competition, if you look at Ireland, if you look at the Netherlands, their tax rate is a lot higher. Ireland, I think, is at 33% on crypto gains. We're on 8%. No taxes on unrealized gains. Other European countries do not only tax realized gains on cryptos, they also tax your unrealized wealth gain that you've generated from crypto. So answering your question, I'd say it's, again, another super positive step forward, especially for the tech community, the guys that have come over to Cyprus, they know cryptos a lot better than we do. They're investing in cryptos a lot more than we are. They know how to use them a lot more than we are. They have security with 8%. They can plan ahead. And as a word of advice, the only thing I would be saying from a planning point of view is make sure you look out for any foreign changes and not local changes. We don't know how things will evolve, whether countries will start applying a withholding tax. Let's say on crypto gains, if, for instance, they're held in, I don't know in which wallet. So what we take into account right now is that Cyprus is at 8, that's it. How you would be accumulating the information, I assume the tax office will be circulating documents, templates, for you to include your transaction history. It will become more aggressive because of all the compliance measures that are going across the globe. Again, DAC 8, other forms of exchange that are already signed for cryptocurrencies. So I'll just close off by saying, if a client comes by my office saying, I want to be selling cryptos, I don't want to pay any tax, I'll just say, I don't know, find a nice African country somewhere close to the rocks, sell them, come back. You can't get everything with a zero tax bill. 8%, again, if anyone would be asked, are you happy with 8% on your crypto gains? The answer would be yes. The drawback of the crypto gain taxation is that it does not allow for a carry forward of losses, which we might see an improvement moving further on in the future. I would put that a bit on the unfair part, not being able to carry forward your losses from crypto for obvious reasons. I would suspect that this might change in the future.
Brilliant comment, Spyros. Thank you, and I fully agree with you. I mean, if it's a point to note, it's the fact that it's a bit restrictive on the losses, carry forward. But I think the simplicity of the system gives clarity to a very complicated thing. So, and I believe that that was the whole purpose behind it, to have something simple, to encourage people to understand it easily, encourage declaration, compliance, and stuff like that. So thank you for the comments, very valid indeed. And I think we have a couple of more questions, and let's pair up on the answers, guys. Non-dom regime and 60-day rule, the tax residency, very important regimes. I think, Marios, you just touched upon at the beginning for the non-dom. The key question here, which comes from the audience, and that's not my questions, does the final reform preserve the strategic value of the non-dom regime and the 60 days rule regime, which is very important for high net worth individuals?
I believe that the combination of the 60 days rule and the non-dom regime of Cyprus is, again, a brilliant tax system, again, the best in the EU. I'll pass the word to Michalis to quickly go through the 60 days, and then I'll carry on with the non-dom.
With respect to the 60-day rules, the regime of it is there. Taxpayers can benefit from this mode. It has been widened. Now you don't have to be, you can be tax resident elsewhere and at the same time using the 60-day rule. This is quite important in the sense that Cyprus remains competitive in that front compared to other countries that are using the 183 days rule. Now, well, it might create some complications with maybe double taxation and issues with our jurisdictions, but of course there are ways to resolve those through the double tax treaty network and the Article 5, the tiebreaker rules, and any mutual agreements between the countries.
So basically, someone can spend 2 months in Cyprus, claim the non-dom regime, and pay zero tax on dividend and interest income earned from anywhere in the world. I've compared our system with other jurisdictions, and I'm convinced it's one of the best, if not the best. Look at Greece, which is one of our main competitors, yes? You have to pay 100,000 flat tax per year. It expires after 15 years, and you also have to invest $500,000 in the country. Ours it's zero for 17 years, and you can extend it, as I mentioned before, by up to 10 years, 2 periods of 5 years each, by paying 250,000 per 5-year period. So I believe Greece is no longer a competitor. Italy, one of our main competitors again, have just changed this non-dom system. You have to pay as of 1st January 2026, 300,000 euros flat tax to claim it. Again, no competition there. Malta, I believe, is our closest competitor, which even though it works on a remittance basis, you don't really you can even claim it by not even spending a day there, as long as your center of life is there, which is contradictive. So I would say Malta is a good competitor, but again, Cyprus, you can claim it for 17 years, paying zero tax on dividends and interest, and it has been extended via this tax reform to another 10, so a total of 27 years, unmatched in my view across the EU, if not globally.
Thank you, guys. Indeed, the regime is brilliant, and that's the reason we need to do more on the ecosystem, because from a tax perspective, we have a brilliant regime. Then it's how you attract these people to come to Cyprus. So many more things needs to be done, so that to feel welcome, safe, and the quality of life plays a very important role, because many of these people are relocating with their families. Thank you, guys. And last question coming from the audience to Spyros and Christos. I think it's important when it comes to the tech industry and generally speaking to have people that are investing into the country. So investors, VC, holding companies, family offices. So the key question here, guys, is does the tax reform strengthen or weaken Cyprus' appeal to investors, VCs, and holding structures? And how does it affect the NID regime, participation exemption, qualifying title exemption, and all the stuff that we know up to now?
I will start from foreign investors. So obviously a foreign investor will look at the system as a whole and will also look at your tax treaties. To be honest, tax treaties, because they are bilateral in nature, we cannot reform them on our own because we need to renegotiate them with our treaty partners. So obviously, inherently, we cannot reform our existing tax treaties, but we can reform, we can agree new treaties on a better way. But again, with the reform, there are steps that you can still use the current treaty network of Cyprus or on our benefit. So for example, the abolition of the automatically residency test, both for corporation and individuals that you are not considered resident in Cyprus, if you are resident in another country, which this was a mistake, not a mistake, anyway, it was, I would say at that time, a positive direction, but now it's not. This means that you can still seek treaty protection if the country of residence of the investor in the other country or the company, we have a treaty there in order to solve your problem as a dual resident with the tiebreaker rule. So the treaties are there, we're removing the barriers so we can use the treaties. And we can also use the treaty, for example, for the property reach clause. So we all know that the property reach clause for immovable property was reduced from 50% to 20%. Although this seems to be a movement to the right direction, for the tax office, but due to the treaties that Cyprus has, I will say it will be difficult for the tax office to use this provision because as Cyprus, unlike other common law jurisdictions which are dualistic, Cyprus is a mono-state on treaties, so that the treaties prevail over domestic law. All of our treaties, they don't, to my knowledge, they don't have a property reach clause that deviates from the OECD model that is below the 50%. So in essence, this clause will be applicable in a non-treaty country, which typically you don't see non-treaty countries been investing in Cyprus, and even if an investor was to invest in Cyprus for a non-treaty country, it will use a treaty vehicle. So not sure how this works in practice. I'm not sure why they have done it, but anyhow, I will say the treaties are there, they can be used. Now, from the perspective, of course, we already mentioned that the transfer pricing thresholds have been increased, so this means that less compliance for the taxpayers, and of course, we also expect, I will say, okay, reading the assessment and collection of taxes law, you will see a quite significant number of collection of payments that currently the tax office right now has a majority, I will say, big weapons on their arsenal. It's good news for those that they are paying their taxes, but bad news for those that are not paying their taxes. So they have weapons in their arsenal right now to collect taxes. So we expect a lot of compliance right now. And we also see that the tax department, for the last, I will say, 3, 4, or 5 years, every year they recruit like 20 people or 25 people in order to strengthen the compliance of the department. And we've seen this in practice right now. But yes, on the other side...
They are recruiting from the profession,
yeah.
We've seen this in practice indeed.
Yeah, we are expecting this. And I think that you all seen this, that I submit my tax return in 8-9 months, they clear it out. I mean, it's amazing what's happening right now. I will say, however, the good news, it might be coming from the EU. Actually, on Tuesday, I had the honor to participate at the European Parliament on the FISC, which is the tax committee of the European Parliament, to an event that they gather academics and professionals to speak our mind and see, because right now the EU, after all this mess, and Spyros mentioned it earlier, that all this mess that we have seen for the last 10, 15 years and post-BEPS, and that we still have seen this massive compliance that is coming on the shoulder of the taxpayers. Eventually, right now, the EU has decided to relax the tax burden, and they call it decluttering. So the good news is that right now the EU is focusing for relaxing the compliance burden of the taxpayers. They are very near, okay, I don't know what near means, but they are trying hard to find ways in order to relax the compliance burden. And as soon as there is a political agreement within the EU, this will eventually come to Cyprus and will affect Cyprus. And we all know that the backbone of the EU and also in Cyprus are the SMEs, micro and medium enterprises, and we are expecting this to come. Maybe it will not come in 2026, but I expect this will come in maybe 2027, something like that.
Thank you, Christos. Very useful. Spyros, some final comments from your side?
Just picking up from the EU, I think they've made a mess over the last 10 years. DAC 1, DAC 2, DAC 3, DAC 4, no, they're talking like ducks. ATAD 1, 2, 3, 4, 5, 10, PEPs. They're just going on. And the bad thing about the EU is that it seems they don't have their own agenda. So they're trying to implement their own things, but at the same time, also implementing what others are saying. And again, we're just guessing what they'll come up with next. So concentrating on our area and the question that you posed, and as I said during the first question, nothing has really changed. So for a company that's either receiving interest income, now the rules are clear, just pay corporation tax, end of story. No test of whether it's active or passive, pay corporation tax. Dividends, again, provided they're not hybrids and provided they don't come over from a dodgy jurisdiction with no activities, there is no tax on it. So from a holding or a participation exemption, we are seeing, again, an enhancement or a crystallization of an existing strong system, no changes. Certain things that you should be cautious about involving your holding structure would be something that came into surface into light just before the reform, which had to do with the low tax jurisdictions. Something that you should be really carefully planning in your structures. Cyprus has silently introduced withholding taxes for the first time, a general withholding tax on dividends paid out to a nil tax jurisdiction, in reality to a nil tax jurisdiction. So existing groups that have a Cyprus entity and have a BVI on top or another zero tax jurisdiction will be facing these issues right now. So if someone would ask me again, posing the question that was done at the beginning, holding structures and so on, I would say if we put the reform aside and we go a few months before that, we will be facing an issue. The fact that Cyprus will be applying withholding tax on these jurisdictions is an issue, because clients that are already established in Cyprus have woken up one day just to be told that your structures no longer work, and from tomorrow, 1st of January 26, you will be applying a 5% withholding tax on dividends paid upwards if the jurisdiction is zero tax, or in case you're paying interest, royalties abroad, we will just deny the expense. Now, I don't know how many have really solidified this concept in their structures right now. Maybe the noise behind the reform and what should have been and what should have not, maybe have left this on the side, but personally, I believe that's the biggest challenge we're facing as a jurisdiction right now. The structures are already in place, and it's for those that haven't done any mitigating moves, let's say, by the year end, and they're in 2026 right now and subject to the low tax jurisdiction rules, they will be hit with some very unpleasant surprises.
That's correct, and you are right that from 1st of January 26 we have the withholding taxes on low tax jurisdictions, and you are absolutely right that you should have been doing, or you should be thinking definitely ways to kind of manage any kind of exposures in the structures. And you are right that it was not part of the reform, and it was something which has been voted, and it applies from 1st of January 26, which creates indeed additional challenges when it comes to international tax structuring. I think we finished on the questions part. I don't know if we have any further questions from the audience. There is a question which is on cryptos, obviously, Spyros. Tax on cryptos. Can you elaborate on how the use of crypto as a means of payment will be taxed?
You bought the crypto today at 10 euros. You're settling an invoice. At the time of settling your invoice, your crypto is worth 16. You've managed to pay an invoice at a reduced amount, let's say. You have gained on the crypto whilst holding it, so there will be a tax on it. It's the same as a realized exchange difference on settling an invoice, let's say, in dollars. Paying in euros, an invoice in dollars. Based on the exchange rate, you could gain. Same would apply on cryptos.
Very interesting questions, I think. I think the lion's share goes to cryptos here.
8%.
That is what for non-dom guys. Extension of non-dom status is automatic, or a new request for extended non-dom period should be filed to tax office.
It's not automatic. You have to apply to the tax office to get the extension. You also have to pay the 250,000 euros. So those of you who are close to the 17 years expiry day, let's call it, you should be proactive and request for an extension.
Or thinking about Greece.
There are some interesting questions, Marie, for the deductions, but they are quite technical, so I think we can get it later. Yes.
There's one very interesting one, the photovoltaics and the EV, if you want to...
Go for it. I feel that you want to answer this.
Yeah, basically someone is asking, if I install photovoltaics and I also buy an EV, electric vehicle, do I get €1,000 deduction for each, or is it 1,000 for both of them? 2 points here. First of all, you have to buy it both post 1st January 26. And to answer the question, the deduction is capped at €1,000, but you can carry it forward for the next 4. So if I buy a Tesla for 60K and I also put photovoltaics for another 5K, the deduction that you get is capped at €1,000 per parent again, and you can carry forward the amount, €1,000 each year for the next 4.
Thank you. And one more question, and then we can continue the discussion over drinks. Again, it's on cryptos, Spyros. Sorry, that's not intentional. I mean, it's everything about cryptos. We have crypto holders. 8% is too much. People are saying, if we put it in a company and sell the shares, is that abusive? Just like we used to do with Cyprus real estate in the good old days.
This is probably one of my ex-students, and they're taking the mick out of me right now. So, I don't know.
There is a guard now for individuals as well. So
okay, and I don't know about the good old days. I don't think it's wise placing them in a company right now. Too late. I know. 1st of January is gone, so by the time you place them in the company, you will trigger a sale. So I guess we move on. No more good old days.
Yeah,
but if the question is, if I had them in a company and I sell the shares of the company, there is no tax.
Yeah,
I really would like to know who gave this question later on.
Maybe you should.
I think I've seen them.
Yeah. Yeah, I think we can continue the discussion over drinks. Would be much more interesting with a couple of glasses of wine, I guess. Thank you so much. Thank you, dear panelists.
Charalambos.
Pleasure discussing this topic with you. And let's continue the discussion over drinks.
Let's drink, yes.
Thank you.
Thank you, guys.
Thank you.